Came from really optimistic to like, whoa, what just happened? What's going on? You know? But cool. What's up, Tammy? What's up, Michael Gross? All right. So what's up to some peeps there? Dr. Jacqueline Thomas Ali is in the building. We got DeFi Panda. We got Jorge in the house. Cool. All right, let's check it out. Hold on, I got so many tabs. Too many tabs. Let's just get the good ones. All right. Okay. Let's get into it. So let me share my screen real quick. I only have one screen today, so I'm not going to be able to read the comments too well unless I get on my phone, actually. I'll get on my phone here. I'm by the pool area today. There we go. Hey, there we go. Now I'll be able to read your comments if you make any. Put them on my coffee cup over here. All right, cool. The infinity screen is here. Let's get into it. So again, I had these charts I wanted to pull up from Friday because the market was looking pretty good. You know, like we were pumping and things were looking very optimistic. You can see here, you know, that there was a potential sign of a confirmed breakout of a 2-month channel. You know, we've been kind of sideways in Bitcoin for about 2 months since like November. And there was a breakout, you know, and there's some people that thought that we were just going through some accumulation before potentially running a lot higher. Right now, we're kind of in this pullback phase. Let's see how it, you know, plays out. We still have some days and weeks and some price action ahead of us. You can see here, this is another interesting chart, which was showing how Bitcoin follows gold usually, right? And you could see these different gold bull markets. And then when gold would start going down, Bitcoin would start going up, right? And then gold was going up, and then gold was going sideways and down. Then Bitcoin went into a crazy bull market, right? Here is gold in a crazy bull market. Then a lot of that money finds its way into the orange asset here. And once again, we have price divided by model. So yeah, this is like a different schematic of looking at the price of Bitcoin, right? This is looking at it sideways here, price divided by the model. They have some sort of model they're running to see these accumulation and bear periods. But down here, you can see it actually overlaid on the price, and you can see kind of how it pans out. So there was a delay here of about 428 days. This was another delay of about 243 days. This was another delay of 63 days. So it was kind of tightening up. And again, it's just an interesting chart. I don't think that, I mean, this is, again, correlation is not causation, right? But there is something to the cyclical bull markets that we do see. And capital likes to rotate itself, right? So like last year, there was a big AI trade. This year, there might be another something trade, right? There might be another. Right now, we're seeing commodities boom and metals boom, right? And again, like money, like energy cannot be created nor destroyed. It can only change, right? So when we think of money, it kind of always gets printed. It's just that that money finds its way into assets at different times, right? And sometimes it hangs out over here where it's safer, and sometimes it hangs out over there where it's a little riskier. Sometimes it goes to crypto like it did in 2021, right? And we had a crazy bull market. Sometimes it just goes to Bitcoin and just stays with Bitcoin, right? But capital always kind of ebbs and flows. So what we're doing is we're trying to position for that momentum, right? Whenever it comes, we don't know when it's going to come. I mean, heck, crypto could go sideways for another 3 years, right? Like these are all possibilities. Now, are they likely? I don't think so. You'll see some other stuff that kind of dropped recently. But the price action of Bitcoin, you can see we've been kind of like in this box, right? That 2 month long box right here. And on Friday last week, it seemed like we were really pushing up. We actually even touched $98,000. And since then, we've only pulled back about, $6,000, right? I have this level marked here. This is 90,500. Hopefully Bitcoin so far since the middle of November, right? It's put in a low and it's kind of started to make higher highs and higher lows and higher highs and higher lows and higher highs. So right now we're watching to see, is Bitcoin going to hold this pattern? Is it going to remain making higher highs or higher lows? Or is this a critical, vulnerable moment where Bitcoin may break down and we might go lower than the low that we made in November? These are all possibilities, right? That's why it's very important in how we do things to do your best to stay on the right side of the market, right? And yeah, I think we've been doing pretty good of staying on the right side. It's annoying when there's chop and stuff, especially some of our algorithms, they might take some losses, right? But you've got our, stock algos, which have mostly been out of the market since November and October, and that feels nice while things are kind of sideways and figuring themselves out. This was a piece of really good news that came out. I have, there's this awesome piece of news that just dropped like literally today. You could see updated 3 hours ago, 6 hours ago, 3 hours ago. This is a pretty big piece of news. You can see the New York Stock Exchange parent Intercontinental Exchange has developed a platform for 24/7 tokenized securities trading. So we're witnessing mass adoption take place in front of our eyes, and it's very exciting, right? This is a very exciting time. I think it might be partly why the market is kind of dragging its feet, is because there's still all this rolling out of new products and services that Wall Street wants to get their hands on and wants to get their nails into, and maybe there's some sort of suppression, maybe there's some sort of manipulation and keeping the price of crypto down for as long as possible before, like, inevitably a beach ball underwater will eventually erupt up out of it. I think that moment is coming at some point. I don't know when that point is going to be, but hopefully it's closer rather than later, right? But you can see New York Stock Exchange plans transition to tokenization. That's a huge advancement for Wall Street as a whole. Develops a tokenized securities platform to support 24/7 trading. That's crazy. Right now, the stock market is only open from 9:30 until 5 p.m. or 4:30 p.m. every day for 5 days a week, right? And it kind of sleeps too. You have the futures market, which is open 24 hours for 5 days of the week. Yeah, that's like your global stock market. But now to say 24/7, it's pretty interesting. It's a pretty big advancement, I'd say. Now, I don't think that it's gonna be an advancement, but I still think that there's gonna be a big part of the world that ideally mainly trades in the week, right? And from sunrise to sundown. 24/7 is cool for the stock market for sure. But there's definitely a level of that volume plays into it, right? Where we see the most amount of activity, usually that's where we get, this actually could create a very choppy environment, especially for the stock market. But it's an advancement to say the least. Yep. So here's the news that came overnight as well last night that shocked the market a bit. And Trump has a tendency to do this when there's low liquidity. It's interesting. Like, he usually doesn't drop really big news until it's after market hours, or it's the weekend, or it's Friday. Um, Buenas. And he usually, does this. He usually does this when the market is very low volume, and that's when those big moves come. Now, I don't know if he does that because he likes to move the market and he wants it to overreact so that it can kind of balance itself out, or what. But again, this news came as of yesterday. Yeah. But let's see some of this. So you can see here, I have some points highlighted. US President Trump imposed a 10% tariff on 8 European countries effective on February 1st over Greenland. Right now, that's the big fuss, is the US wants to buy Greenland, and is it Denmark doesn't want to sell it. The tariff will be increased to 25% on June 1st unless a deal is reached for the purchase of Greenland. You can see the European Union is preparing $93 billion of tariffs on the US, right? So again, right, you hit me, I hit you back. So now the EU is planning more tariffs on us, on the US, or restrict American companies from the European market, and retaliation to the latest threat by US President Trump as European leaders meet for an emergency meeting on Thursday, the FT reports. And here you have another kind of headline that tends to move markets. You have the Iranian president, I'm not going to say that name because I'm going to butcher it, warned that any attack on Supreme Leader Khamenei, maybe this is the president of Greenland, I'm not sure, would result in an all-out war, and any military aggression would be met with a harsh and regrettable response. Pretty crazy, huh? And you can see here, this is a chart of, this is what happens when there's new information, especially shocking information. The reason why markets drop so much is because there's a repricing that goes on, right? And say you're a company that has 20% profit margins and you make $100 million per year. Well, now with some new tariffs that were imposed, your company actually stands to only make $80 million per year. And because of that, I have to reprice what I think your stock is worth. And that's why we have these big movements. And that's especially why with Trump, we have a very volatile market, is because the market is constantly repricing information. Oh, there's these tariffs. Now we have to price that in. And then the next thing you know, oh, we're actually walking back on the tariffs. And then we have to reprice that back in, right? And then, oh, China is going to put these types of tariffs on us. So now we have to price that in. And then, oh, China's going to lower their tariffs. And oh, the US and China are going to strike a deal, and this is going to be cheaper now. So it's constantly pricing things in. So markets love certainty. They hate uncertainty, right? And a lot of times they do overreact. Let's see what happens throughout the week. Again, kind of weird that, today it's a US holiday. It's Martin Luther King Day. And, a lot of people have work off. The markets are closed, at least stocks, right? So people aren't trading. So tomorrow will be very interesting because that's when everybody gets to their desk, right? That's when all the hedge funds wake up, and that's when all the pension funds and institutional funds, they get back to the trading desk. So it'll be interesting, Yeah. Let's see. Let's see what happens. But yeah, it's like uncertainty has become certain now, which is another thing, you can see this is kind of interesting too. So you have to understand too, what is also going on is we're seeing a massive monetary reset take place in front of our eyes, right? Like the US dollar is becoming less and less relevant, and countries are starting to lose faith in the US, right? Remember, about 100 years ago, right, with the Bretton Accord, I think that was what it was, Bretton Accord, where the US became the world reserve currency. There was like this globalist agenda that kind of started where we said, hey, let's unite forces. Let's, uh, build our factories in China, and the Europe produces something, we start trading, and it became this global economy where the US dollar was the reserve currency, right? Now, what that then allowed is for the whole world to agree. And back then, the US said, hey, we're going to back our money with gold. It's going to be safe. It's going to be a currency that's actually backed by something, right? And our military is going to back it as well, like the strength and might of the US economy. And for a long time, the US has held that reserve currency status, right? And again, to keep stability, if you're a European nation, if you're an African nation, if you're an Asian nation, if you're a South American nation, right? Whatever independent sovereign nation you are, if you have your own currency, the best way to stabilize your currency is to hold an equivalent amount of dollars. It's kind of like a liquidity pool, right? Like if I have a bunch of Bitcoin or a bunch of ETH in my liquidity pool, and on the other side of that, I have whatever token I have, right? There's going to be more stability in this pool because ETH and Bitcoin may have value, right? As opposed to one random coin paired with another random coin, right? Because their value, it might not be so valuable. And again, countries for the longest time have been the biggest buyers of US denominated debt. So, that's what's kind of kept the US economy going too. That's what's funded the US government, is the fact that the US has a lot of military presence around the world. And in exchange for that, countries buy US debt. They buy bonds. They buy treasuries, right? They support the US government. Those treasuries are dollar denominated reserves for them. It helps keep their currency stable. And that's kind of how the world's been, right? And again, as long as there's faith, as long as there's trust, as long as there's credibility, right? The system was operating pretty well for a pretty long time, But recently, around the time of the start or the restart of the Russia-Ukraine war, right? Back then, the Biden administration, they froze all of Putin's American assets, which was his treasuries, right? And he had billions and billions and billions of dollars worth of US treasuries, and they froze those treasuries, and they basically signaled to the whole world that, hey, we're the US, but we have complete control over what makes up a significant portion of your net worth, and we can just turn it off with the snap of a finger. And what that kind of brought about was, whoa, if they did it to Russia, what if they do it to me, right? And we saw a very long pattern of countries starting to de-dollarize. That's what's going on right now. We're seeing a lot of de-dollarization, and a lot of those reserves that countries globally have held on to have been going down, right? They've been holding less and less. They've been selling them, actually, right? Because if I have a treasury and I don't want it anymore, I have to go and find another buyer. And what happens is, when I sell treasuries, when treasuries are sold, if more treasuries are sold and bought, the interest rates will go up. If more treasuries are bought than sold, interest rates will go down, right? Because I have this piece of paper that pays me 2% every year that I paid $1 million for. And now if I want to get rid of it, I might sell it to you for a discount. And if I sell it to you for a discount, it makes the perceived interest rate a lot higher. And that's how the bond market kind of operates. And this is interesting. So going to this article, right? Look at this. Deutsche Bank's thoughts on Greenland. Europe owns $8 trillion of US bonds and equities. Europe owns Greenland. It also owns a lot of treasuries, right? The US has one key weakness. It relies on others to pay its bills via large external deficits, right? We rely on people buying our debt to fund our deficit. And right now, Europe holds $8 trillion of our debt. If you look at the US debt clock, it's a few tens of trillions. So this is a big part of debt that the European government owns, right? So Europe, on the other hand, is America's largest lender. European countries own $8 trillion of US bonds and equities, almost twice as much as the rest of the world combined. So that's why we've had such a good relationship with the European Union and Europe, and travel is very friendly there, and there's very little visa requirements. Like I scratch your back, you scratch my back. But look at that. In an environment where the geoeconomic stability of the Western alliance is being disrupted existentially, it is not clear why Europeans would be willing to play this part. Danish pension funds were one of the first to repatriate money and reduce their dollar exposure this time last year. So again, this trend we've been seeing take place for quite some time, where we're starting to see foreign nationals de-dollarize, repatriate their money, right? You know what? Let's get rid of this junky dollar and let's buy whatever, the Chinese yuan or something. And again, with USD exposure still very elevated across Europe, developments over the last few days have potential to further encourage dollar rebalancing, right? Again, like the US has almost made the world their servant, right? Because, well, I bought $8 trillion worth of your debt. Like, if you don't pay me back, like, I'm kind of screwed. My country's screwed. And the value of our currency is screwed because we've backed it by this thing, and it gets kind of crazy. So here's like a chart, right? Like, look at this from 1990 until today, right? And you can see in blue, this is a share of gold and official reserve assets, right? Globally. I think this is for, governments and central banks worldwide, right? And you can see that around 1995 or a little shortly after, right, more and more of the world started to hold, in red here, percentage of US debt held overseas, right? More and more of that world started holding that debt. And then after 2008, right, which again, remember, like 2008, like the US kind of screwed the world and global economy, right? Because they got too greedy. And like, I know for one instance, like completely collapsed the economy of Iceland, like just look at a 2008 documentary. You'll understand a little more of what went on. But it affected the whole globe, right? Because again, remember, the whole globe is holding on to dollars. And there was this crazy collapse from too much debt and crazy mismanagement of funds. And particularly Wall Street drove it, But again, after that moment, what had also happened was we printed an absurd amount of money for that time, which was like $800 billion, right? So when you print like $800 billion, you send a little bit of a ripple throughout the world. But what happened around that time too was the Federal Reserve came out with a program called quantitative easing. And this program was designed to help stimulate the global economy, help stimulate reserves worldwide, right? Because what happened was these banks got so many of these mortgages that were worthless, they had to find somebody else to sell it to as a buyer of last resort for liquidity. And they started selling it to the central bank, right? To the Federal Reserve. And it started printing money and buying these reserves. And again, they buy debt from commercial institutions. They inject liquidity directly into the system, right? If you buy a bundle of these mortgage-backed securities, even though they might not be worth anything, right? We're going to make money out of thin air. We're going to buy this thing, and it's going to stimulate the economy, and it's going to keep the world going, right? And that's what happened from 2010 until 2019. 2019, they start raising rates. There's a little bit of a shock. They pull back on it. We have 2020, which was, again, these gray shaded lines are recessions, right? We had a short recession in 2020. And since then, but you could see that basically since then, like the percentage, you can see percentage of US held debt overseas dropping, and the percentage of the share of gold in official reserves is rising, right? And it's, look at the trend line has completely also gone kind of parabolic. And I'm realizing this isn't even up to date. This is until 2025, right? I didn't find any up to date. These things take time to update, I think. But I can imagine this is way bigger now and this is way smaller now. But yeah, you can see here. So things are looking a bit, shaky. I'll say that. Things are looking a bit shaky. This is a fractal, right? This is what the S&P 500 looked like right before the beginning of 2025, which led to a crazy sell-off, right? And this is what the S&P 500 looks like now, right? Now somebody drew a trend line here, which is super subjective, but whatever. We've broken that trend line. And you can see this blue line right here. This is the 50, I think this is the 50-day moving average, okay? And you can see like sometimes when we break below it, there's a sustained sell-off, right? And we're very close to it. So it could be a big area of support. Hopefully the world or Trump or whoever can get their act together this week. If not, we might see some crazy downside volatility, right? And here is the NASDAQ, which is also breaking down from this pattern. Again, it's subjective. The way you draw these lines and all of that, like it's just idea. I'll just say that it's just an idea, right? This might be a break of trend, right? But things are, markets kind of gap down like pretty hard overnight. And you can see this is the 125-year-old trend line everyone is max bullish at is the resistance trend line. So this is a trend line from the Dow Jones going back to 1899, 1906, 1929. You stretch it out, 2001 came really close. 2008, can't really say it did. 2020, I don't know, did it not? It looks like this is 2025. And we're like right there, Again, this is like not saying that the market is going to melt down and collapse, but it is to bring into perspective that we're very overbought, right? But we can remain irrational. The market will always remain irrational longer than you can stay solvent. And that is why we do what we do with the systems that we have, is to do our best at staying on the right side of the market, right? And we never know which way it's going to go, right? Are we going to enter another crazy recession, depression? Are we going to go into a crazy parabolic 2000 style blow off top, right? Like we don't know these things. So we do our best, right? And you can see here, this is a very classic depiction. Some of y'all might have already seen this. This is called the Benner cycle. It's a long-term economic theory from the 1870s by a farmer, Samuel Benner, predicting recurring panic years, good times, and hard times, using a pattern of 16, 18, and 20-year panic cycles and 7, 11, and 9-year recovery phases. So it's like this really big quadratic, and in it you can kind of, and I also asked AI, like, how accurate was it? It's not all the time accurate. It actually got only about 7 out of 18 specific predictions correct, while another showed only 48% overall correctness for forecasters. It did get some notable tops like 1929, 2000, mixed accuracy, right? 2020. You can see here, right? So like look at 2007. So you have these 3 periods. You have an A period, a B period, and a C period. The A period is years in which panics have occurred and will occur again, right? So look, 1999, stock market went so much higher, right? That was the big blow off top before the 2001 top, right? But it was fairly close, right? 2007 was the year that stocks went higher. 2008 was the year that they all kind of crashed. 2019, market kind of ended up higher, but 2020 we had the collapse, right? So it's not always correct, but sometimes it's very close to like these crazy moments that happen, right? And you can see here, 2016, that was a good year. That was a year look at the B years are years of good times, high prices, and the time to sell stocks and values of all kinds, right? They're saying this is the year to take profit, right? Like 2007 was a great year to sell value because the market crashed after that. 2016, especially for crypto, was it 2016? No, it was 2017, right? So not the best year. So you can see it's a hit or miss. But based on this, 2026 is supposed to be a good year that then ends pretty badly, right? And then from 2026 until 2032, we have a down period, right? Before from 2032 to 2035, we potentially have like a crazy bull market, right? Let's see how it plays out. Could be right, it could be wrong, right? But these C years, right? This is where I think the most important thing in this market is to just be able to survive and hold on to your purchasing power, because real wealth is built in these periods that you go from lows to highs, right? Like from 2012 to 2019, tons of wealth was built, right? From 1996 to 1999, tons of wealth was built, right? And yeah, so let's see how everything goes here, you know? And this was something interesting too. So I went into this thing called Yardeni Research, and what they've been doing is they've been putting out a forecast on the S&P 500 every year. Okay, so basically how this works is, you know, when this year opened up, you know, they had drawn this red line in of where they're forecasting the S&P 500 would go, right? And sometimes it outperforms, sometimes it doesn't. This year opened up, they drew this red line, and that was like exactly where the S&P 500 went to, and then it retraced. And then here they drew, like, the year is opening up here. They're drawing their line up here, right? And the S&P 500 went there. The year opens, they draw a line. The S&P 500 has gone to it. So it's had some pretty interesting accuracy. I'll say that, right? Like here's 2018. And they called like the perfect top of the market before this big sell-off that we had in 2019, I think. Yeah, 2019. And yeah, and here's 2020, right? They say, hey, look, this is where the market's going to end up. They didn't, I don't know if they foresaw this coming, but every year since about here, 2022, they've been putting out like the high and the low of the market, right? That they envision. The low, the high, the low, the high, and they've been pretty accurate, to be honest. You can see this is last year in 2025. You know, they had a prediction 5,800 and 7,000, and we literally finished the year at about 7,000, and the low was also right around 5,800 for the S&P 500, the stock market, right? And this is looking at a little bit of a different model than this model, okay? But it's very similar. You can see this was like figure 6. This is figure 13. I don't know what the difference is, but this is their prediction for this year, right? They're saying that the S&P 500 has, you know, this is the upside target and this is the downside target, right? 7,700 as, you know, where it could potentially top out. So if you see the S&P 500 at 7,700, might be a good time to take some profit on some things. And they're saying that the bottom could potentially be 6,300, right? So if we do see a sell-off, right, you can see they're still pretty bullish on the market overall into the next 4 years, 3 years, 1, 2, 3, 4 years. Okay. But what goes up must come down, right? And they have these downside targets. So again, if there's a pullback in the general market, I don't know how correlated or uncorrelated crypto and the stock market are going to be. Sometimes they are, sometimes they aren't. But I will say usually crypto is going down if the stock market is going down. It's not exactly true when it's going up. That could change again when we get the Clarity Act and Wall Street and stuff like that. They get to tokenize their market. But still, you know, if we see some downside, it could be dips that are worth buying, right? I really, until everybody thinks that we're in a never-ending bull market, I can't see us go into a multi-year bear market again, especially with Trump in office. I don't think that he's going to allow for this to happen, right? So again, very optimistic year for this year. Doesn't mean that we're going to go straight up. It doesn't mean we're going to go straight down. It just means that these are two milestones inside this year, okay, from Yardeni Research. And now moving on into our strategies. Okay, moving on into our strategies, you can see all of our buy side strategies. These are the Leo strategies are out of the market. They exited as of yesterday on some of these. You can see this is ETH. ETH exited as of yesterday. Okay, Bitcoin never got in. It was pending for quite some time. We just never saw it enter the market, which was really cool. Cardano has been out of the market on the buy side for quite some time. And Solana also exited its trade. It's V4 trade, right? Now, V4 was already in a trade when we got the V4 upgrade. But now that it's out of the trade, we have officially launched V4 in all of our crypto signals and vaults. Okay, pretty interesting. It closed a 1% profit. It had a pretty nice run up. It gave a lot of that back. But again, the money management, it closed the trade in profit, right? Wasn't the biggest profit, but it was some profit. It was pretty good. And it had a pretty good entry as well. And this is our Gemini templates. Okay, this is our Gemini strategies. Okay, Bitcoin is short. Ethereum is short. Cardano is short. And Solana is on the sidelines. It just closed out a long trade, right? So very interesting, right? Now the prices right now, right? These are all in small losses, okay? Does V4 know something that we don't? I don't know. But it did see a reason to go short. Right now, very hedged, right? So again, if you're in Gemini Bitcoin, short trade is active. If you're in Ethereum, Gemini ETH, we're in a short trade. If you're trading the crypto signals, Cardano has went short, okay? And we'll actually look at Cardano's performance on these strategies. We'll compare it with V2 and V4. It's very impressive numbers. And real quick, oh yeah, these are different comparisons as well. So this is comparing the old strategies with the new V4 strategy. Okay, so this is the underlying community that created this. Fantastic traders, decades of experience. They've been building V4 out for the last 2 years, right? They launched V2, about 2-3ish years ago. They launched V1 like summer of 2022. So it's almost coming up to 4 years now. But here you can see this is the Bitcoin V1 strategy, right? And you can see that throughout all these years of backtesting, right? This is how it ended its year with last year it ended okay, sorry. This is the max drawdowns. I'm like, what's going on? Why is this all negative? These are the max drawdowns, and this is the year-end numbers, right? So last year, as we all know, Leo Bitcoin ended red. Okay, this is Leo Bitcoin bull run. Okay, we can't see as much of it here, but you can see it did close the year green. We didn't have it launched for the whole year, but it did close the year in green. And you can see its compound annual growth rate, looking at all the years of Bitcoin's history, 134%. So Leo Bitcoin bull run is still a pretty awesome strategy. Max drawdown of 19%. Okay. Leo Bitcoin, compound annual growth rate of 91%. You can see how many green years it had. Last year was one of the first red years. And this is actually not Leo Bitcoin. Forgive me. This is V1. This is V2. This was Leo Bitcoin. Okay. And you can see how that last year ended red. But you can see like V1, compound annual growth rate, 91%. When they launched V2, the compound annual growth rate improved, right? So yeah, and you can see there's some extreme years here, right? Like the first year here, very unlikely that anybody would have been trading these, right? So, but they do play into the totals and everything like that. And then this was V4, right? And you can see the year by years, right? V4 ended 25%, V2 ended negative 14%, right? The year before in 2024, right? V4 would have done 130% on Bitcoin. And this is including the short side, right? This is Gemini Bitcoin. 37%. You can see kind of like this massive improvement of the different strategies, right? V4 tends to outperform generally. And we're, again, just excited for that upgrade. Here is Ethereum. Okay, this is V1. None of us here ever traded V1. But you can see they had a compound annual growth rate of about 77%, max drawdown of 22%. Even V1 ended the year profitably last year at 50%. V2 ended the year even better, 67%. This is with the short side. So this is looking at Gemini ETH. Okay, 67%. And you can see the compound annual growth rate, 77%. Compound annual growth rate, 76%. And then here is V4. Okay, now V4 last year also did good, 58%. Okay, it did not outperform Gemini ETH, V2. But if you look at the years prior, right, this was, we decided that V4 is the better script. 72% versus 126%, right? 38% versus 35%, kind of neck and neck. 158% with 164%, 249%, 304%. And look at these drawdowns compared to these drawdowns, right? The drawdowns are less, the returns generally are more. And you can see that compound annual growth rate of V4 in the last 1, 2, 3, 4, 5, 6, 7 years, 94%, right? It doesn't mean that every year is going to be 94%. Some years are going to be smaller. Some years are going to be bigger, right? But this is the comparison of the ETH scripts. Now we're going to take a look at our Cardano strategies, okay? Our Cardano strategies. This is Leo Cardano V2, Leo 8S since 2024. You can see pretty big drawdown of about 47%. This really all came last year. There was a lot of chop on Cardano. And you can see 37% total profit. Still profitable, but it gave back a lot of its profit. You can see that win rate, very small. And you can see the average profit was 50%. The average loser was 7%. But it took way more losers than it did winners, right? And there was a really big moment for Cardano during the Trump election that the Cardano script took about 100% profit, which is really cool. This is Gemini Cardano. This is with the short side. Okay, 23%. So the short side performed even worse. Okay, there was this crazy trade. Since then, it gave back a lot of that profit, right? Since September, the short side on Gemini Cardano version 2 was able to get back some of the profit, but generally really large drawdowns and smaller profits, okay? Now let's compare it to V4. Okay, this is Leo Cardano V4 since 2024. You can see way better trade management, right? Way more profitable trades. You can see here the average profit does go down. Okay, look at, this is Leo Cardano. Average profit 50%, average loss 7%, right? Now the average profit goes down, but the amount of times you're in profit goes up. So that actually does better for the statistics in the long run. The drawdown also goes down, so they were able to manage their trades better. You could see the trade distribution, right? The average trade sit around here of about 15%, but there were some trades that were big and 60%. There were some trades 30%. There were some trades 40%, right? And the losses on average about 5%. Okay, so big improvement from Leo Cardano. This is only for the signals. We can't have vault products for this because we can't trade Cardano inside of Enzyme. But yeah, pretty cool. And then this is Gemini Cardano V4 since 2024. This is with the short side. You can see the profit goes up exponentially. The drawdown also goes up. This is not for the faint of heart, right? 32% drawdown is pretty rough in some regards, right? So this is where you have to be mentally prepared to see your capital or your profit go from 50,000 all the way down to 33,000, right? This is why it's a consistency game, right? But still, much improved statistics for the Cardano strategies. All right. And I'm just finishing this off. I don't know. I just thought this was a pretty interesting piece of news. We do have a very strong solar flare that is expected to hit us within the next 2 to 3 days. And this was posted yesterday. So maybe in the next 1 to 2 days. Now, I don't know what effect this is going to have on technology, places around the world, or really around the northern hemisphere. You can see it's going to hit South America pretty hard. It's going to probably hit me pretty hard here in Panama. I don't know about all of y'all in the south. And looks like, the north might get some of this exposure too. But yeah, it's just interesting. I don't know if the market is going to react off of this or what's going to happen, but there was a pretty big solar flare that just came off the sun. Pretty epic solar flare. Again, I don't know what that's going to do, but this is saying that there might be some major disruptions for a number of minutes to a couple of hours in the affected areas. Okay, so if you notice something's off, just keep this in mind. Okay. But that actually summarizes our stuff here. I don't think, yeah, we didn't look at the stocks. And just real quick, I took a screenshot, I thought. Yeah. For anybody curious about the stocks, okay, we are currently fully sidelined on the stocks. Okay. We are currently sidelined on the stocks. So MicroStrategy is out, Tesla is out, NVIDIA is out, FNGU is out, TQQQ is out, and IBIT is also out. So right now we're in a very strong position of cash. Our Gemini strategies are in short trades. Where is that? Yep, are in short trades. So Gemini ETH, Gemini Bitcoin, and short trades. Some other updates for our Scorpios. We currently have Scorpio 1, Scorpio 2, Scorpio 7, and Scorpio 8 are trading Gemini ETH V4. And then we have Scorpio 3, Scorpio 4, and Scorpio 6 trading Gemini Bitcoin V4. Okay, so all our Scorpios are in trades. If you have some money in those, that's the strategies that they're currently taking. And yeah, that's about all the updates I have for y'all. All of the signals are updated now to V4. Okay, so there will be no more V2 strategies. And also all the vaults are on V2. Leo Solana did close its trade out. V2 closed its trade out. So now we get this chance to make the full rotation. If you guys have any questions, please leave them in the chat. We have about 9 minutes for questions here, so it's pretty good. What's going on with Solana? What is going on? I don't know. I have no idea what's going on with Solana. Maybe give me some more context. What do you mean? I hear a lot about CME gaps. Can you explain what that is? Sure. So let's pull up TradingView. I'll just show it to you on a chart. CME gaps. Somebody asked about CME gaps. Let's see what that is. So yeah, like here is, so what is the CME? The CME stands for the Chicago Mercantile Exchange. This is where a lot of futures contracts are traded, okay? What a futures contract is it's basically an options contract that does have an expiry. Yeah, they're basically options contracts that you can trade. that give you a lot of leverage, and a lot of the market trades on CME. Okay. Now, what a gap is there's something called regular trading hours. Okay. And the markets stop trading on Friday and they start trading again on, hold on Sunday evening when Asia opens up. Okay. So when it's the morning for Asia, that's when these open back up. And you can see basically what happened over the weekend is Trump texted about some sort of tariffs, and again, the markets overreact. And so when the market opens up on Sunday, you can see the market closed up here at 25,677, and then it left a gap, right? Like this. So the market opens up way lower. So then what happens is there's a gap in the market of where value still has not traded, right? Now these gaps, right, commonly they can fill, right? So the market may, for example, come up, it might fill the gap to rebalance value, and then it goes back down. That can't happen. You can see a lot of these gaps in the Bitcoin futures contract, right? Like you could see here from this Tuesday to this, like here's a gap that happened. This is CME for Bitcoin. This is, let me just ask a quick question. How much of the total Bitcoin volume is traded on CME versus spot? Just to put into perspective, CME Bitcoin futures volume has grown significantly in recent years, especially after the approval of spot Bitcoin ETFs. In January 2024, CME's total derivatives trading volume reached 95 billion, a 35% increase. Bitcoin futures volume alone rose 42% to 73 billion that month. Let's see, as of October 2025, CME's year-to-date average daily volume for crypto futures was 270,900 contracts, valued at 12 billion in notional terms. In contrast, global spot trading volume on major exchanges consistently exceeds 100 billion daily. Hold on, this isn't really telling me. Thus, while CME futures have become a major regulated venue for institutional participation, they still represent a small fraction, likely less than 10% of total global Bitcoin trading. So it's not a major part of but it's still a big part of the Bitcoin volume that's traded, right? And here I can ask another question. How much of total volumes for the stock market come from CME? I'm just curious. Let's see if it knows how to answer my question. CME's volume is not a percentage of stock market volume, but rather a major component of derivatives trading volume. So what is its volume on a yearly basis versus stock? I'll just say NYSE, which is the New York Stock Exchange. So average daily volume is 28 million contracts. Notional value reaching 7.3 trillion. New York Stock Exchange, 50 plus trillion. So yeah, you can see it's not like the biggest market, but it's still a substantial market. But again, it drives value, and that's where a lot of hedge funds and institutional investors, instead of buying the NASDAQ shares straight, they'll just buy a contract, right? Which represents 10 shares of the NASDAQ or 20 shares of the NASDAQ. Or instead of buying Bitcoin, they'll just buy the Bitcoin contract, which this contract represents 5 Bitcoin, right? So it gives you a lot of leverage. But these gaps are basically, here's Bitcoin from Friday to Sunday, right? It opens up with a gap right here. And you can see that those gaps very commonly fill and price might go. Oh no, actually, the gap originally was from here to here, right? And then the market closes a lot of that gap and then goes back the other way. But I also know that there's some gaps. You know, some people talk about gaps. Traders all the time talk about these gaps. There's still gaps from like way back. Like look at this gap right here, right? Here's a crazy gap, right? That didn't close until, you know, Trump's tariff thing. But the idea is these gaps do close eventually. It's not guaranteed that all of them will close. You know, like here's a gap from, yeah, I can see a gap from here to here, right? There was a gap right here, right? It didn't close until November, you know? And then there's gaps from all the way earlier. I think there might be even gaps from like 20,000 that just like never filled, you know? So it's really speculation. It's just how the market kind of, yeah, like look at this gap. This gap never filled right here. Yeah. That gap never filled. And that's all the way down at 10,000 bucks. Like, I don't think that that's going to happen. But when people say the market gap down, they're really referring to, you know, it was the weekend. And because of some crazy Trump tweet, the market opened up way lower and it has this gap. It created this gap in the market, like you can see right here. Okay. So that's good. Hope that answers your question. Somebody said, what's going on with Solana? And they meant as in how it's looking towards the future. I hear it's a good one to hold. Yeah, I mean, I personally don't hold Solana, but I trade Solana through the strategies, right? I personally trade Solana through the strategies. We have a pretty awesome strategy on Solana. Hopefully V4 does really well, you know, but I put out this long slideshow into the community. It's like comparing all of our strategies. We have, you know, Gemini, Solana. This is the one that shorts, right? Last year did 37%. Since 2024, it's up 148%. Since 2023, it's up 2,922%. So I do believe in the exponential growth of Solana. I just don't know when that's going to come. And I want to be on the right side of the market so I can stay out of a whole bunch of drawdown, you know, because Solana's cool. It's probably a good asset, but it's also very volatile, right? Like Solana peaked around January of last year. And since then, we're still down about 55%, right? So it's been tough to be a Solana investor. It's been sideways for quite some time. Right now, the chart generally looks pretty good to me. I just don't know when it's going to go. And yeah, and you can see it had a pretty nasty sell-off here just in the recent couple of days, 10% off. But yeah. What do I think about XRP? I don't know. I used to be a lot more bullish on XRP. Now, a little less. I hold a little bit, but I sold off a lot of my XRP. Cool. Yeah, I think I answered your XRP question. Yeah, XRP, I mean, very volatile too. I think that thing's down like 50%, you know? Let's see. Oh, yeah, that's rough. 46%. Yeah. I don't know. Let's see what happens. I know that there's a lot of believers in XRP. Yeah, I used to borrow against mine, and at a certain point I did get liquidated on my borrowed stuff against my XRP, and one day I sold off a big chunk of it for another crypto that I believe in a lot more. But yeah, I think this kind of wraps it up. I don't see any more questions in here. Nice, Tammy. Cool. Yeah, I sold off some of my own Bitcoin and ETH and bought silver with it. couple of weeks back. All right. Thank you all. Appreciate you, and see you on the next one. All right. All right. Peace out, family.